Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy and talking crude oil. A worker strike at an oil driller in Norway has caused a supply disruption in crude oil, pushing Brent up to higher highs today than we saw yesterday, up toward that $80 mark again. At one point, Brent was actually up over 1.25%. Now, this is not a lot of crude oil. It's in the multi-hundred thousand barrels. It's not even reaching 1 million barrels, but it does halt production and halt that crude oil from reaching market. It could be a very short-term strike. We don't see a lot of strikes in this region of the world, but it did happen, and we are out about a couple 100,000 barrels of oil based on that strike. Now, WTI was up as well, but it pulled back. Norway crude oil is Brent crude. WTI went up in sympathy, as that spread generally dictates what happens between Brent and WTI. But WTI started higher and then pulled back as the spread tightened in. Now, if you don't know the reason for that, WTI is always discounted to Brent because WTI is landlocked at its source. So there's a transportation cost that the buyer has to pay before it gets to a port. And then obviously the buyer pays the shipping from the port as well. So WTI is always cheaper than Brent because Brent doesn't have that issue. Most Brent crude oil is right near ocean ports. Now, that spread has tightened up quite a bit. The spread has gotten to about 141 over the last few days. Today, it actually expanded out about 11.8%, getting to 4.5, and that's still pretty tight for this spread, and that caused the WTI pullback because, again, if Brent is at a certain price and WTI is close to that price, they're going to opt for Brent because they don't have to pay that shipping cost or that transportation from the center land where WTI is drilled out to a port. So you're going to see that spread widen when these things happen, and that caused the WTI pullback today. Still positive, but Brent ended up about 95 basis points, WTI about 34 basis points, or less than 0.5%. Also, the dollar stronger, bearish on all commodities, didn't really affect crude oil. If you're a crude oil trader, that dollar takes care of what crude oil should be doing when all else is equal. But when you have a supply disruption like we had with the Norway strike, the dollar takes a secondary position. It did help keep a cap on WTI today, however, with that little bit of a stronger dollar move we saw. This is Bob Iaccino talking WTI crude oil from the CME Group trading floor in Chicago.